What's up, guys? Welcome back to Trading with Emotions. We are going to be talking about this regression trend IQ test game that we are in, okay? It's not financial advice, all right? Okay, so this right here is literally, guys, if you've taken an IQ test before, you remember these little guys that we got going on here, right? These shapes. We got circle green, red, blue, and then we got the little plus sign. It turns slightly, and then it turns one more time, and then we have the same thing happen right over here, right? Which is like a minus sign here, uh, turning in certain degrees, right? And then you have to guess what's happening down here. So this right here is just an example, and I wanted to start off with this just to show you how I'm going to be explaining this down here, because this also has a frequency in the way that these little arrows end up, being flipped on specific points here in the regression trend. Okay, so get that guy out the way. This is a regression trend, right? So we have our support and resistance line that we are following. Within this regression trend, there's a smaller one, and that is what's happening back here. It's respecting this zone here. And they're both vertically and horizontally put in place to follow this trend line. Like, they're exactly the same degrees pointed to the downside. And this is why this makes so much sense. But this is just a way in which I can explain the cycle a little bit better, because the cycle is a little bit tricky to understand. But, okay, for those of you that know the 62-day cycle, you know that there are shorting stages and long stages, right, where you have to cover those shares that you're synthetically shorting, right, through the option chain and stuff like that. So the way this happens is we have these little symbols here, right, that are playing out. We have yellow, green, blue, or I'm sorry, yellow, green, red, blue, and repeating, right? Yellow, green, red, blue. But these are changing direction whenever they meet these specific points. And these specific points, guys, are exactly 2 months apart, and some of them are 3 months apart. So these larger ones are going to be 3 months apart right here. This one's 62 days. And then this one back here, green to green, is going to be 3 months. Okay, so one's 2 months, one's 3 months. So the interesting thing here, guys, is that, again, this follows the things that are happening within the cycle. For example, if we take, and I'm going to show you guys the scenario as well when I bring this up, so just don't focus too much on that right now. But this is what's happening, okay? This pattern right here obviously is found down here, okay? And that is what's starting this whole jazz. It's right here. This is constantly being found every 3 months. Here it's flipped, and it's also inverted. So this, if we clone this guy and we mirror and we flip it, right, we find it right here, right? This is down here. And all you got to do is change the height. There's nothing wrong with changing the height. The ratio stays the same. There it is, right? You got this thing playing out right here, that pattern. Now, 3 months later, you have the same pattern playing out identical, right? So we just put it back in its form. And that is what's happening down here. You see that? The cycle? Okay. Hover that guy right over here. And that's what's happening right here, okay? Same thing is happening within this other section here. So this is taken down here. I'll do a bars pattern so you guys can see exactly where I'm getting this, okay? Right here, green to blue, and then you have the inverse happen over here. So all we gotta do is mirror that guy and just paste it over here. See? Same thing. And what does this indicate? This indicates that, again, there are stages in which these shorts are shorting, and then they have to cover in the future. And this is very, very manipulative in the way that they're doing it, because, again, they're using the option chain. How? If this didn't have an option chain, then you wouldn't see a something so cyclical be happening in a frequency, right? In frequency. So this is clearly an indication that something is occurring because of a certain event that shouldn't have happened in the first place, right? The fact that they were over leveraged in their positions and they shouldn't have gone into a play, and now they have to manipulate the stock because they're trying to save themselves, right? And again, this is taken from the idea that that this would be, you know, those shorts that are actually manipulating the price. However, this is also the same thing as a higher institution like that has way more money than these shorts and are also manipulating the price. Goes both ways. I have my theories to believe that there's a composite person controlling the price, and that they're the reason why we are trading where we're at. I don't believe that the shorts are the ones controlling the price. But these institutions are also shorts, so they also have to save themselves whenever they are, you know, doing this. And that is the reason why I don't believe we're going to go to $5, because I think they would be putting themselves at crazy risk shorting the price down there. Okay, so now that you guys know how this sort of structure works, let's get into this yellow portion here, because here we have, you know, this is where it's a little tricky, right? Because this is not only mirrored, it's also flipped, which doesn't really happen with the other patterns. But as we come down here in this new channel, this new regression trend that's smaller, we have this playing out the same way back here, and we come across this, which this is where it gets a little bit sticky, and this is why I believe that this might be the signal that I've been waiting for, and I've been talking about this on the live streams, that at some point we are going to stray away from this cycle, because we're gonna either have another leg up and create a new cycle, or we're gonna squeeze, right? And then when we squeeze, there's not going to be a cycle anymore. At that point, the ripple effect is going to cause this thing to be so volatile that it won't even matter. It might matter on the way down, but it's not going to matter when we actually run up. So it's irrelevant. So this is formulated based off of the idea that if we were to track some sort of like cycle based off of these movements and these option expiration dates, that things might play out in this way, because this would be a cup right here. Breaking out of this wedge, this would be a cup. Now let's go back to this pattern right here, because as you can see, the repetition here would be up, up, down, down, right? So one would think, you know, taking that IQ test, you'd be like, okay, well now this has to go up, up, right? But this pattern actually goes down, down. This right here is just this pattern back here is just mirrored, right? And this is found right here. And this is the same thing, right, that is happening down here. See that? Same exact thing happening down here. So I have a reason to believe that since, you know, this is playing out differently than the past inverse or identical patterns that have been playing out, that we might be breaking or straying away from this cyclical sequence, right? Because here it's been very, very you can see clearly what's happening, guys. It's 4 times that everything's repeated itself in coordinating in the way that these patterns are playing to the inverse or identical. You can see that happen, but right here it's like making something else. So obviously I'm keeping an eye out for this, and I'm looking at the patterns. However, it's still tracking the cycle, but it's tracking it differently. It is the thing. It's tracking it completely differently than we're used to, right? Just inverse or identical. So that's, again, something I'm going to look into. But right now we're on this regression trend, and we should be bouncing to the upside, and that's why I have this laid out here for you guys. But this date right here, man, this March 18th, is again taken from the previous high year, September 15th, and then December 15th, and then this would be again March 16th area. But it goes hand in hand, guys, because these are considered the quadruple witching dates, which is kind of funny that they land specifically on in the way that they're tracking here. This would be or I'm sorry, these are not quadruple witching. December was a quadruple witching date, not September. December was a quadruple witching date. And so is March. March is a quadruple witching date. However, June was the previous quadruple witching date, which is where they brought us up and created those premiums, those extremely high premiums. So again, it's something that I'm looking into, but just the way that everything's structured here, this is an indicator, guys, that there's a possibility that we might reach this area back here before, March 18th, which would be around the $30 level. And I think that's very realistic because, again, you find yourself in this sort of cup and handle pattern. And at that point, guys, it's really hard to maintain the price down, because if you're really trying to short the price to a penny and they, these institutions bring it back to these levels, at that point it's just FOMO. And FOMO is ultimately what's going to kick this thing off. So I think this would be a reasonable scenario for that. And yeah, guys, just want to show you, man, how the cycle mechanics work, because this is probably the best way that I'm able to actually explain it to where it makes sense. So if you guys have any comments or questions, just leave them down below, and I'll do my best to answer every one of you. We also have a Discord now, so you can click the link below and it'll take you right there. And again, man, I do cycle updates as well as scenarios, weekly scenarios. So this will be the update, man, for the weekend. And yeah, man, I'm freaking pumped, bro. Like, we're breaking out of this wedge, ready to go. So come to the live streams. We have some fun. We throw elephants in the chat, and we kick it off, man. We do have a good time. So thank you guys for watching, and you all have a great rest of your night. Alrighty, bye bye.